Good afternoon, everybody. Welcome to another Think Realty webinar. I am Kurt Power, the sales director with Think Realty, coming at you from my hotel room in beautiful Tampa, Florida, site of the upcoming Think Realty conference here in Tampa this Thursday and Friday. It is not too late for you to still register for your tickets. thinkrealty.com. Use the promo code TRFriend. I'm going to hook you up with free tickets for being a part of this webinar today with our great guest, Nate Zielinski, Senior Partnerships Coordinator with RCN Capital. RCN Capital, if you're not familiar with them, you're in for a treat. If you are familiar with them, you already know. One of the premier private lenders in the entire space out of Connecticut, headed up by Jeff Tesh, one of the legends, titan in the industry. So long-term friends of ours, as well as our sister company, the American Association of Private Lenders. Always super excited to have them on there, especially right now when things are a little bit crazy in the market. Nate's going to talk to you about a very effective strategy that works in any market, up market, down market, middle market, using the BRRRR strategy. So this is how a lot of people have got their entry point to real estate using this strategy, but it's also how people continue to grow their wealth, continue to grow their portfolio. So you're never too advanced to relearn something that still works in every single market. So I'm going to be sharing some information in the chat as far as our Think Realty conference coming up this Thursday. If you do have questions, I ask you to put it in the Q&A, not the chat. It makes it a little bit easier for us to follow along. But I'm going to be here if there's any questions I can answer along the way. But right now I'm going to turn it over to Nate. Great to see you as always, man. How are you doing?
Kurt, thank you for having me. I'm doing well today. Excited to be able to talk to some people here and let them know about the BRRRR strategy, as you mentioned. And yeah, let's help some people out and teach some people some new things today.
For sure. And like I said, I've been a long-time friend of RCN. They've been friends of ours. So anytime we get you guys on here, it's always incredible, valuable information. And especially, like I said at the beginning, in this kind of economy, we're starting to see kind of that transition from the commercial space. I'm noticing it, and I'm talking to a lot of people that are starting to see a little bit less than multifamily. They're going back into single family. So the timing of this presentation could not be better. So looking forward to it. I'm going to get off camera, hide my ugly face, let you get going on there. So take it away, man. Appreciate you.
Awesome. Thank you so much, Kurt. The feelings at RCN Capital are mutual. We love our relationship with Think Realty. But hello to all that are joining me today and all that will be watching this recording. I really appreciate your time. Happy to answer any questions. So Kurt, if anything comes up and you want to interrupt me, totally fine with that. If we want to wait till the end and address them, both of those strategies work well for me. But as you can see here, my name is Nate Zielinski. I'm a Senior Partnerships Coordinator over at RCN Capital. And today we're going to be talking about utilizing the BRRRR strategy, maximizing the most out of your investment portfolio, being a little bit more well-rounded, being able to, survive the ups and downs of the volatile real estate investment space, as we've come to learn over the course of the past year and a half or so. So without further ado, let's kick things off here. So I think, you're going to see this slide on just about every presentation when it comes to real estate and real estate investing, navigating the changing market. So textbook dictionary definition, we did hit a recessionary period in 2022, 2 consecutive quarters, the overall economy shrank. So just to kind of wrap your head around, what a recession means, what happened to kind of lead to those factors. But I will say, in regards to recessions and as they go, there is definitely a little bit of a change from the one that occurred in 2008, or a little bit of a difference. We didn't hit that kind of low valley, if you will, that we did post 2008. So, the labor market, consumerism, all that stuff stayed strong. There was a little bit of a hit to the real estate market, obviously, some rise in some interest rates. But there are still some profits to be made. There are still viable strategies out there. Let's see if I can hide this. All right. Apologize if this meeting here, this bar gets in the way at the bottom, but I'll do my best to kind of fill in the blanks here. But what that is hiding down there, for those that can't see it, is the BRRRR method is still an extremely viable option. That's kind of where we come into play and what we want to teach you today. The word recession proof gets thrown around a lot. It's hard to kind of claim that something can withstand any recession, but the BRRRR can get you very close to that, and that's what we're going to be talking about here today. So for the BRRRR strategy, all right, let me see if I can put this. Oh man. All right. Anywho, I don't know, Kurt, if you have any, I apologize here for the bumpy start, but if you have anything, hide, there we go. Bingo.
Looks perfect. I see.
Awesome.
Understand the BRRRR strategy, buy, renovate,
Okay, great. Great. I was just seeing some, regular Zoom stuff on my screen that I was hoping wasn't getting in the way.
All clear on
All
our
right,
end, man.
let's continue. Sorry for that, folks. So yeah, understanding the BRRRR strategy. What does everything mean? For those of you that are new to this methodology, it's buy, renovate, rent, refinance, repeat. So, pretty standard here, but some quick definitions. Securing the right property is always the first step. One of the things that you want to get out of the way early on when discussing the BRRRR strategy is that not every property is going to make sense for this strategy, but being able to find those properties and turn them into the profit that you're looking for and that cash flow property that you're looking for is crucial. It's extremely vital, right? So, sometimes a property, there might be way too much work that needs to be done to it. Or, if you do too much work and you want to, have it rented out for a certain income that might not gel with the rest of the surrounding properties, there's definitely that sweet spot that, maybe it's a little bit trial and error, but going in with all the information ahead of time can kind of better prepare you for that. You really want to find those properties that fit the mold of what the BRRRR strategy can do. So, right, it's finding a property, then renovating it, perform rehab to increase value in key areas is something that you want to do with, even fix and flips, but definitely for the BRRRR strategy, and then maximizing what you can charge for rent. So not going above and beyond, but maximizing what the potential zip code or the surrounding neighborhoods dictate. You really want to zero in on what changes need to be made to get you to that high end rent roll for that specific area. As I mentioned, charging $2,000 for monthly rent in an area where the average is $1,300-1,400, your property may stick out like a sore thumb. It's going to be harder to secure that tenant. So doing the right amount of renovation, finding the right property are all things to keep in mind. Once you're able to rent that out, you're going to check with the market data, kind of as we mentioned, ensure that it's accurate and that the property is going to cash flow at a spot or at a pace where you are accruing that passive income. You're also able to pay off the existing loan on the property, as well as having some profit left over is a huge key for investors out there. The refinance is probably one of the most important steps in the BRRRR strategy. The cash out refinance is crucial aspect of paying off the initial loan. And then with that cash out refinance, those leftover funds, so you pay off that initial loan, whatever's left over, that could be the complete down payment, the start of a down payment, or you could have a down payment and some cash left over. So refinancing at the right time, lowering that interest rate, just getting out of a bad loan and into a better loan is really the key here, and kind of the final nail in the coffin for the BRRRR strategy. When you're talking about the steps here, refinance is very crucial, and then repeat. Obviously, if it works once, do it again, because repeating this strategy, accumulating those properties, generating that passive income, that's when it really starts clicking. That's when you really start seeing those benefits roll in. And it's just a huge beneficial strategy for investors to take advantage of if they can repeat this over and over and over again. Generational wealth is a term, again, that gets thrown around a lot in the investment space, but this is the way to achieve it for sure, the BRRRR strategy. So a statistic here, I'm going to go into a couple data slides now that kind of show the opportunity. This is a quick one, though. Obviously, between the next 2 decades, there's going to be almost 10 million net new renter households. So there is opportunity out there to secure those properties, do the renovation, rent them out. There's going to be tenants looking, all over for properties, and then you're going to refinance down the road and repeat this process. So over the next 2 decades, for all of the real estate investors out there that, this is their main source of income, this is their job, this is their 9 to 5, the opportunities are definitely out there and will continue to be out there for the foreseeable future. So looking at some of the statistics, as we mentioned, rates did increase. That kind of threw the market into a little bit of turmoil. Days on market is definitely a statistic that we're looking at, but it favors investors that want to go for that BRRRR strategy. As you can see, there's more incentive to hold properties as rentals. The fix and flip model is kind of taking a back seat. in this current market. Not that it's not a viable strategy, a great option for those that prefer it. But as you can see here, holding onto those properties as rentals kind of kickstarts the BRRRR strategy, if you will. And that's what this market is dictating right now. There's a little bit of higher interest rates, obviously, so people are a little skittish when it comes to buying. And you're going to have much more tenants flood the market as renters that are be looking for people that own investment properties. So you're positioned very well if you can secure those properties initially for the first stage of the BRRRR strategy. And then there's less competitions to build out that portfolio. What that means is, there's less investors in the market. There's also less people looking to buy their primary home. So that puts investors in a very unique position with this strategy in mind when everybody else is kind of taking a step back and not wanting to buy properties and have that long-term commitment. Investors can take that step forward with the BRRRR strategy in mind, knowing that if I secure this property now, a couple of years from now, a handful, maybe even 5 to 7 years. Again, we're going to go over this a couple of times. This is a very long-term and patient strategy, but with it in mind, you can take advantage of the current market right now. Again, for inventory, kind of the same thing. There were historically low numbers because nobody wanted to buy or sell throughout the course of 2022. It was a rather bleak outlook, if you will, but that is slowly starting to change. Interest rates have leveled off. We're not seeing them rise at that quarter-to-quarter level that they were throughout the early stages of 22. It's slowly improving. So what this means is when there's higher inventory, there's going to be lower prices, obviously. But for right now, as that inventory is coming back, there's going to be a flood to the market of people that want to buy once again, once the market kind of corrects itself. And they hear from all the national media outlets and, it's okay to buy a house again. It's okay to put your house on the market again. Before that flood or that rush happens, investors, again, are in a good spot right now while it's kind of, low interest in getting out there and getting in the market. Investors can take advantage of this right before the inventory jumps to a insane level and the prices are so low that nobody may want to buy again. We're in that sweet spot right now where investors can really take advantage of it. So in today's market, kind of what I discussed over the course of the past 3 slides there, but just a great recap. The rates have increased since mid-2022. But you can buy right now, getting those properties into your portfolio, setting you up for the long run. Aim to refinance your portfolio when the market dictates. When those rates drop, are you going to have properties in place that you've already bought? You've done the renovation work. They're currently being rented out. You're getting that cash flow. But once those rates drop and you refinance, that cash flow becomes even greater. So not only are you making money now, but you're setting yourself up to make more money in the future. The patience and being selective, with your investment properties is something that's going to pay off down the road. As I mentioned, again, I'm going to harp on this because it is a little bit of a long-term strategy. This isn't a get-rich-quick scheme, if you will, but with the pieces in place and the knowledge in place to kind of go ahead and take care of what you need to take care of in the next 6 to 12 months. So down the road, you can really take advantage of it, is very key. There's still obviously money to be made off of a cash flowing rental property. It's kind of the rich get richer, if you will, is kind of the motto for the BRRRR strategy. You're making that passive income off your rental property, but you can multiply it when the rates drop and you're in a position to refinance. The long-term strategy. So obviously when the rates are lower, it's easier to make that money relying off appreciation. But when the rates get a little bit higher, there's less competition out there and cash flow becomes extremely crucial. So finding those properties that can lead to that stable cash flow is very essential. Don't sink too much into the rehab portion of it and kind of hurt yourself on the back end. And as well, keep in mind that if it's at a stable cash flow now, it can get even better down the road. So not every property is a fit for this strategy. And then keeping an eye out on those prepayment penalties, working with any lender on those 30-year long-term rental loans, there are going to be some prepayment penalties, but let that kind of dictate, keep that in mind as something to weather the storm and hold out for those lower interest rates. Obviously, prepayment penalties can be maneuvered, manipulated, changed to whatever the investor or the borrower kind of desires. But if you have a 5-year standard prepayment penalty, holding on to that property for 5 years now makes much more sense. And then if you're in that position to refinance after 5 years and a day, great. You have a bunch of properties, you've avoided any prepayment penalties, and you now can capitalize on your investment strategy that much more. Determining if the BRRRR strategy is right for you is also something that needs to happen for you as an investor. Preferred work style, right? So is that long-term patient strategy something that you're willing to do? This strategy is not for everybody. Are you looking to kind of move on from one task to the next? That's kind of your fix and flip strategy. Again, we kind of touched on it. It's not really prevalent in today's market. It's not really the go-to strategy. But for some people, that's what they love to do. They love to get into a property, give it a facelift, and then 6 to 8 months down the road, when they resell that property, they get that profit, they check it off their list, and they move on to the next one, right? The BRRRR strategy, is very segmented. You have to do it on a step-by-step process, and you're really setting yourself up for success in the future. So some people just want that money right now, and that's what the fix and flip model does for them. Do you prefer the ground up construction model of really having that clean slate, putting the work into it? There is some time and some stress that comes with the ground up construction model, but a lot of people love that freedom of creativity, having that blank plot of land, doing whatever they want with it, and then putting it back on the market as an investment property, or as a property for somebody to buy their primary home. So there are different goals, different strategies out there. Does the BRRRR work for you? And if you haven't considered it yet, does some of these talking points make you want to do the BRRRR strategy, where you can be setting yourself up for success in the long run, that passive income, that generational wealth? That's really what the BRRRR strategy leads to. Do you have the bandwidth in place to scale? A lot of people that first get into the BRRRR strategy, they might want to seek out advice from a mentor, or find a partner to help them secure these properties at a better clip, have somebody to bounce ideas off, balance the workload. So are you in a position in your investment career to take advantage of the BRRRR strategy? Don't just jump into it because I'm on a webinar today telling you about the benefits of it and how it can help you in the long term. Make sure that it's something that you're comfortable with, that you completely and fully understand, and that you're ready to take on the challenge, and wait it out, have that patience. So it doesn't fit for everybody, but it is a very successful strategy, a model that a lot of investors, a lot of real estate entrepreneurs have been taking advantage of for years, for decades. But it's just, are you ready to make that leap, take that jump, have that patience, wait it out? There might be some ups and downs with this strategy as you go along, but it is successful. It does have a proven track record. It's just, when is the right time for you to start and initiate the BRRRR strategy? So some investor statistics that kind of support the BRRRR. Almost 20 million rental properties are owned by investors in the US, according to census data. So obviously, right off the bat, investing in real estate is extremely viable. It's a great side hustle. It's a great main gig. There are people that are flooding to the space to this day, even in a little bit of a rougher market. Investing in real estate will and always will be something that's extremely popular, extremely viable, and can lead to success. People love taking on that challenge as an entrepreneur, as a businessman or woman. The BRRRR strategy is huge, and investing in real estate obviously is a huge part of it. The average real estate investor owns 3 rental properties. So again, don't just stop at one. Don't have one rental property that cash flows, that makes you some money on the side. Again, the fix and flip model, that can burn some investors out, right? Always going back, doing the hard work, the deadlines, the stress of that, that can really burn people out. A lot of people get into the real estate investment space, and then they get right out of it when the going gets tough, right? So the BRRRR strategy, getting multiple rental properties, that offers you some flexibility, takes the burden off of your shoulders, so to speak. If you have, a couple rental properties that are doing really great, that can, outweigh one property that's currently underperforming, or one fix and flip that goes bad, one ground up construction property that seems to be always having hiccups. If you have the BRRRR strategy in place and those rental properties that are accruing the rental income, the passive income, leading to that generational wealth, just waiting on that refinance to multiply those gains, having multiple rental properties definitely just puts the rest of your portfolio at ease, if you will. Roughly 70% of rental properties are owned by individual investors. So when I look at that number, I see mostly very brand new investors that don't have their network built up, or extremely experienced investors that can do this by themselves. Now, they've been in it for decades. They live for investing in real estate properties, but that still means there's a chunk of over 30% that are doing this with help. So don't ever be afraid to partner up with people, use your network to your advantage. There are definitely different ways to go about it. It's kind of what suits your style the best. But, for securing a lot of properties for the BRRRR model, that's a lot of debt right off the bat. You got to afford those down payments. You got to be able to have some people that have some expertise with doing the renovation. So you can do this with people that can help you, that you can partner with. There are people that do it both ways. So there are different avenues to success. That's one of my favorite things about, working in the industry, doing these presentations, help training people. There's not a one size fits all. There's not one pathway that everybody's kind of jamming the aisle and, flooding the market and really blocking other people from having success. There are so many different avenues to achieve success, to achieve wealth in the real estate investment space. So just keep that in mind. You do not have to do this alone. There are people out there that do it, but you don't have to be. 70% of rental properties, that average total value right around 400K. To me, this says that you can do the BRRRR strategy without breaking the bank. You can find those initial properties on the market for $175,000, $200,000, $250,000. Housing prices have dropped a little bit right now because of the rise in interest rates. It kind of has skewed affordability. But if you find those properties, do the proper renovation, and are able to put them back on the market for $275,000, $300,000, $350,000, you're really putting yourself in a spot to succeed, to charge more for rent, to take advantage of that rehab work that you've done. And you don't have to do it. You don't have to find these, $750,000 properties, these $1 million properties. You can find it with very affordable rental units and go from there. And then a buzzword, right? Everybody, that invests in real estate, does this for a living, has years and years invested into real estate. Everybody wants to be a millionaire, right? That's kind of the feather in the cap, the success, the checklist, the kind of I've made it. According to Mashvisor.com, real estate millionaires own 10 rental properties on average. So, those are people that have probably used the BRRRR strategy to get there, right? They've done it a bunch of different ways. They settled on, hey, getting those long-term rentals after increasing the value. So the rent is actually increased from when I purchased the property. Not only that, but do I get to multiply it when I refinance, when the market has those peaks and valleys. When the interest rates start going down, I get that cash out refinance. I can charge the rent that I, can continue to charge is actually netting me more money because I have a better loan now. It just puts them in a position for success. So, you talk to real estate millionaires, they know what the BRRRR strategy is. Not every one of them maybe does it religiously, but they know what it is. They've probably utilized it to get to where they want to be in the real estate investment industry. And it's just a very sound tactic in how you can keep and hold on to those long-term rentals and, generate that generational wealth. The BRRRR strategy is definitely how you do it. For some potential problems to avoid, right? Not every strategy is foolproof. Not every strategy is without its faults. So there are some things to keep an eye out on. As long as you avoid them, you stay on the path, you should be good to go. You might have some hiccups here and there, but overall, the BRRRR strategy offers a level of stability that's hard to find with other real estate investment models. So missing the ideal refinance window, right? Your property is still going to be able to accrue those rental profits, but it's not going to be at that perfect interest rate that you want, right? So you buy a property, you do the renovations, it's been renting for now 2, 3, 4 years, and you're like, when can I refinance? When can I refinance? So, right when you want to refinance, it might not be ideal. There might need to be that extra level of patience of waiting it out. Maybe you take advantage of the first dip in interest rates and you refinance. That's fine as well. But, there's really something to be said about holding on to it for as long as you can, getting that ideal rate drop, and then you can just maximize your profits on the back end when you finally do refinance. So there is a little bit of a waiting game. There could be a scenario where you're doing the renovation and you're thinking in the back of your head, oh man, I wish this property was done. I wish it was being rented out so I could refinance right now. So you kind of have to pick and choose your battles right there. Be really smart about when you're refinancing and at what interest rate. But again, even if you do miss that ideal window, you can still have, at the end of the day, a cash flowing property in your portfolio that you're taking advantage of. So just some things to keep in mind as you go along and pursue the BRRRR strategy. Scaling too quickly is another one to avoid. Sometimes investors can get swept up in buying too many properties because, obviously for the BRRRR strategy to work, you need one property, then you need 2 properties, then you're going to look for your 3rd, 4th, et cetera, right? Buying too many at the beginning is something that you're going to want to avoid, right? Because then you're sapped with a bunch of renovation projects. They all have deadlines. You're splitting your time, your money, your energy into different properties when, really just segment by segment, you really want to buy a property, renovate it, rent it out. Buy a property, renovate it, rent it out. Then once you have a bunch of those properties in your portfolio, you can do kind of a massive refinance of all of them. Yes, you can refinance one at a time if you would like to do so, or if that's what your budget dictates. But getting those properties scaling at the appropriate clip and then taking advantage when you have 3, 4, 5 properties in your portfolio is a lot better than buying 4 properties all within the same year, 18 months of each other, and trying to juggle a bunch of different renovation projects. So keeping in mind that you're doing this at a patient pace, at a smart pace is something that you're going to always want to keep in the back of your head. Don't jump the gun, get too eager, and then overwhelm yourself. Expenses can add up from a project management perspective. Again, one of the reasons why you want to do this at an efficient clip, you don't want to get ahead of yourself. These can add up, right? Outsourcing on every job. You got landscaping, painters, general contractors, HVAC, plumbing, whatever the case may be. Outsourcing on those jobs, they can add up and hinder an investor's bottom line. So what you're going to want to do again is find that ideal window of what needs to be done. What should I be focusing on that's really going to help this property increase value, get it to a spot where I can increase the rent, be at the higher end of what the market dictates or the metro area dictates, and then just go from there. Consider that a win, right? Don't over obsess or over analyze every little square inch of the property and make sure that everything gets done, everything looks perfect, spotless, brand new. Not everything needs that. Sometimes what's in place will do just fine to get you to that stage where you can rent out that property, right? The alternative solution, this can be seen as a problem, but it also can be seen as a solution, right? Learning each step of the process. So not only mastering the BRRRR strategy, but also, from a renovation standpoint, okay, maybe I can watch a few YouTube videos. Maybe I can go into Home Depot or Sherwin-Williams and get the painting down. Maybe I can take care of that myself. Landscaping, it doesn't have to be perfect. Obviously, the professionals know what they're doing, but there are definitely some, DIY landscaping hacks that you can do as an investor to take some of those costs off of your renovation budget. There's always going to be some things that you need that professional help, somebody with a license to come in and take care of, make sure it's done right. But there are so many things that an investor can learn that they can do themselves that will be so beneficial to them in the long run. Yeah, it might slow your progress down initially, but really, if you're in this for the long haul, taking the time to learn these steps, learn these different ways to renovate the project, or learn these different real estate investment strategies. If you're still in the industry, you're going to look back in a decade from now, 15 years from now, and you're just going to be a wealth of knowledge. People are going to be attracted to you, look to you as a potential mentor. So staying in the industry for a long time has its advantages, and one of them is being able to really, fall in love with the process, learn every step, become more well-rounded, and it'll be so helpful for you in the long run. Again, we kind of talked about this, but rehab budget can sink profits. So not only do you not want to obsess over every part of the renovation and just sink a bunch of money into it and turning it into a beautiful home, because like I said, that can actually hurt you or hinder you when you're looking to rent out a property and you say, hey, I did so much work to it. Why can't I charge $2,000 for rent? Why can't I find a tenant? Well, it's because, maybe you didn't do the research ahead of time and realize that that's not really what the market dictates for that particular home. Yes, maybe you will eventually be able to find a tenant, but in the meantime, when your property is sitting on the market for 1, 2, 3, 4 months, you start adding it up and you're just losing out on all that potential cash flow. And, with the fact that you did a lot of rehab work, that can become extremely stressful for any investor, right? So finding that right rehab budget, and then find a lender that will fund 100% of the rehab. I know obviously RCN Capital does that. There are so many other lenders in the space that do, but that can be a huge burden off of an investor's shoulders if they find a lender that can fund 100% of the rehab, work that into the loan, and again, take that burden off an investor's shoulders. It can really be helpful in the long run, reduce stress, all good things, right? So 100% of the rehab, yes, the loan is going to be a little bit bigger, a little bit more to pay off. But with that cash out refinance, once you've increased the value, the refinance you should get from that other loan should be enough to pay off the first and then leave a little bit left over for the next down payment. So every strategy has its pros and cons. We kind of just touched on some potential problems there, but just kind of overview here as we near the end of the presentation. Pros and cons of the BRRRR, right? So scalability and passive income increase. That's kind of a no-brainer. What we've talked about. If you really want to level up in the real estate investment space, become a real estate entrepreneur, become somebody that is revered in the space, that people look to as an expert, as a success story, the BRRRR strategy is for you, and that scalability and that passive income is how you get there. The high return on investment potential, who doesn't want a high ROI, am I right? Getting that property at a lower purchase price right now because of what the market's dictating, putting in the rehab work. Maybe you found a lender that's going to fund 100% of the rehab. That's great. That takes another burden off your shoulders. And then, you're in a spot to rent it out, get that passive income going, work your way back towards, neutral and into the positive for an ROI. You refinance. So now at a better loan, you're capitalizing on your monthly rent that's in place. And then who knows, a decade from now, 15 years from now, plans change, things change, obviously that's inevitable. But the work that you've done for this property, you now have a decade of success, a track record of success. If you were to eventually sell that property out of your portfolio, the ROI that you get is just mind-boggling, to be quite honest, right? From a $150K purchase price to a $300,000 home that's been giving you passive income for a decade, your ROI is substantial there, and it's great. So again, the BRRRR method is how you do that. And then more properties gives you more options, right? So again, you talked about the different strategies, refinancing at the right time. If you have a successful portfolio that's based off the BRRRR strategy, you can be so much more flexible in the real estate investment space, knowing that you have that little nest egg in your back pocket that's always going to be cash flowing, that has, a solid strategy in place with an upward trajectory. Maybe you can start doing some ground up construction. Maybe you can invest in commercial real estate, get some stake in a chain restaurant, whatever the case may be. Having more properties, having more passive income gives you more options, allows you to kind of spread your wings as an investor, if you will. So having that portfolio that's so strong in your back pocket kind of turns the real estate investment space into your oyster, if you will. There are some cons. The rehab timeline management. This always has to be at the back of an investor's mind. Is the rehab going to be done on time? Do I need an extension? Being able to kind of put that general contractor hat on, the property and project manager hat on, right? I need to finish this in X amount of time so I can start cash flowing and I can really kickstart the BRRRR process. The buying and the renovation are the two important steps at the beginning that you really need to check off before you start seeing the benefits of the BRRRR strategy. So making sure that timeline works out is huge, obviously, because rehab costs can accumulate quickly. If something is done wrong, if something needs to, or if a lot of things need to be done to the property, those costs can add up, right? And you're doing this multiple times. So you're going to want to keep that in mind. Any way that you can be more cost efficient, working with a general contractor, having that relationship in your back pocket. Maybe he gives you a deal on labor or a deal on material. Any little ways that you can save costs and be more cost efficient in the rehab is a huge step. And obviously, having a lender that funds 100% of the rehab. Yes, you may need to do the work up front, but getting reimbursed for it is huge. So always keep that in mind when you're shopping around a potential loan, looking for a property to buy to do that initial renovation. Always, always, always keep a rehab checklist. And with that, a cost analysis of what the project is going to look like. Just being prepared for any scenario, whether it be worst case or just typical renovation issues that pop up, always be prepared. And again, patience is a virtue with the BRRRR strategy. You're going to take on some debt at first. As I mentioned, you're buying a property. That down payment is big usually. It's a big step. You're going to be doing some renovation work. Again, being reimbursed from a lender is huge and extremely helpful. But a lot of that might have to be done out of pocket at first, and you'll get reimbursed later. And then over time, once you start renting out the property, the advantages kick in, years down the road. Sometimes it can be months, but you're really going to wait this out. And then in 2-3 years, once you've accumulated a few properties, done the necessary rehab, you're going to look back and be like, oh, I get it now. I'm finally starting to see the fruits of my labor. So, you have to be okay with taking on some debt initially and reaping the rewards years down the road. Who can help you meet your goals when it comes to the BRRRR strategy? Utilizing or building out your network is extremely essential when it comes to the BRRRR strategy. Finding those real estate agents that are going to help you identify properties. This house just came on the market. I think it's going to be perfect. I know the last time we sat down, had a cup of coffee, talked about the industry, you mentioned you were toying with the idea of starting the BRRRR strategy. This property looks perfect for what you're trying to do, right? So having that real estate agent, having that connection for somebody that's, boots on the ground, always looking at properties that are coming and going from the market, that can be a huge asset. Finding a tenant for your property while you're doing the rehab, again, is huge. Real estate agents can also help with that. They're looking at potential buyers potential tenants all day long. That's, who they mainly talk to. So if it comes up that you have a great relationship with a real estate agent, they know you're doing renovation, they're taking this, potential tenant on a bunch of different visits, and they're not really looking like they want to, settle down, buy something long term. They're not ready to pull the trigger on their primary home. They can maybe refer those clients to you. So any way that you can find a tenant before the rehab is done, let them know that there's a date, there's a goal in mind. You can move in at this date, at this rent, setting up that beforehand. So before you're even done doing the work, you have a set rent in mind, and you have a tenant ready to go, ready to sign, ready to move in when the property is done. Shortening that time from where you're done with the property to when your property cash flows is a huge win for investors, right? You want that window to be as short as possible. As I mentioned, some of the problems that happen when you overshoot your goal and charge too much for rent. Investors' palms can start to get pretty sweaty when they've gone, 4 or 5 months after doing a beautiful renovation project for the past half a year. Nobody wants to be a tenant in their home. That can be a pretty scary proposition. So do as much work as you can to find that tenant before the property's done. And then again, general contractors can expedite the work and lower costs, finding people that know what they're doing. Say, hey, I'm a real estate investor. I have a strategy here where I'm going to be purchasing a lot of properties over the next 12 to 18 months. Would you be interested in potentially partnering with me? Or, you're always going to have a steady stream of work. If you, work with me, pick up the phone when I call, that can be the start of a great relationship. General contractors love knowing that they have business. They don't like sitting in the truck, driving from job to job. If they know that they have an investor in their back pocket that's going to consistently give them work, that's kind of a you scratch my back, I scratch yours type of thing. It's a mutually beneficial relationship, and having a general contractor on speed dial is a win for investors. And lastly here, partnering with a proven lender. I think it's a pretty good segue to, RCN Capital hosting this webinar, being in a position where we can help these savvy real estate investors, these brand new investors that are kind of unsure about where to go in the marketplace. That's where we and other proven lenders come in. So finding that lender, fostering that partnership, that working relationship is huge, because private lenders specifically, debt to income is not a factor. So, some of the cons of the BRRRR strategy are overlooked by private lenders such as RCN Capital. They know that those are investors looking ahead, looking for long-term goals. It's a savvy strategy, right? So the debt to income does not bother us. We just want to help investors reach their goals. And if the numbers make sense, if the rent they're going to charge when the renovation is done, if all that makes sense, the debt to income is overlooked every time. I can promise you that. Repeat business can also be more efficient and cost effective. Who doesn't love that, right? So if you're working with a lender time and time again, they have all the information on your LLC that they need. They have your credit and background history. A lot of those costs on that initial deal with a lender can be, excluded from future deals that you do. The more experience you have, the better your terms get, the better your loan terms get, the better your quotes get. So, going back and working with that lender, letting them know that, hey, I'm experienced, I'm passionate, I'm going to keep feeding you deals. They're going to return the favor, and it's just going to be a joy to work with them. It's going to be easy every time. It's going to get more efficient as you go. And the loans that you're going to be able to get from said lender are just going to get better and better as you go along, as you get more experience. So all good things to keep in mind as you're trying to meet your goals and start that journey with the BRRRR strategy. So the last slide I have for you today is info at RCN Capital, rcncapital.com, a direct phone number. If you have any questions, want to discuss the presentation, want to learn more, sometimes asking questions in this setting isn't always conducive for some people. So don't be afraid to reach out. And then my information personally, if I could drop it here now, it's NZIELINSKI. That's my first initial. My name again is Nate Zielinski. So that's NZIELINSKI at rcncapital.com, as you see here. So just cut out info, paste in N Zielinski, and you can reach me directly if you have any questions. That's going to do it for me today, though. Let's see here if I can escape this. I will stop the screen share. So thank you again, Kurt, for your time. If you have any questions queued up for me, I'd be happy to answer them now.
I've got one, but I also want to make a comment. There was something that you said in the presentation about the buying process and, not waiting until pundits, media tell us it's okay to buy a house again. I think that that's a point that cannot be underscored, particularly if you're a little bit on the newer side. If you've done a handful of deals and you're on that trajectory, understand that this is really an opportunity zone. And real estate investors, frankly, they get excited. There's a little bit of trepidation because you want to wait and kind of see what the market's going to do. But once you make your move, this is when life-changing occurrences can happen. This is when life-changing wealth can begin to be built. So I can't emphasize that enough to back up and echo your sentiment that don't wait. Don't sit on the sidelines and wait until MSNBC, CNBC, all the people say now is the time. Because now guess what happens? You got a ton of competition.
Yeah,
it's going to make it even harder versus a lot of people who are going to be trepidatious. They're going to sit on the sidelines right now. Now's the time to act. So I think that that's a great point that you made. And we've seen it throughout the course of history. And we saw it especially in 04, 05, 06, 07, all the way up to 2010. People were buying 10, 20 properties for pennies on the dollar. Not saying that that's going to happen now. It's a bit of an extreme example, but the essence of the spirit of it is the same. Just act, take action, act. Use people like you, use resources like Think Realty. We're happy to have those discussions and help any way that we can. But a question that was asked here was kind of relating back to materials and labor when we're talking about the cost has gone up. Is it still the right time to do the BRRRR strategy when you're thinking about materials and labor prices going up?
So again, kind of just what you said, right? Waiting on the sidelines forever is something that, it's not a viable strategy in the real estate investment industry. A lot of risk takers, thrive in this industry right now. So, not everything is going to be perfect every time, right? So if you're out there waiting for material and labor to come down, like you said, now maybe you have more competition. You can't even get a hold of these properties to do the renovation work anymore because everybody has flooded back into the industry. I remember, kind of just starting at RCN Capital, our rates were crazy low. It seemed like everybody was taking up investing in real estate. So, the market's not always going to be perfect. You're going to have to pick and choose your battles. But kind of just jumping off what you said, I remember going to the Think Realty conference in Texas earlier this year. The sentiment across the board from every successful investor, everybody that you would look to and be like, I want to get to that level of success. There's no downtime. There's no off season. Right. They're just pushing forward. They're working with what's presented to them. And, it's okay if labor and material costs are up, if down the road you can forecast, hey, the work I'm going to put into this property right now is going to increase the value and it's going to increase the rent. And in a year from now, I'm not even going to think about how much I paid for labor.
Yeah. As you were starting to talk, that's exactly where my mind was going is it's opportunity cost, it's time value cost, all those things, of course, will be factored in. But if you've done your underwriting and you've done your due diligence and you know your market, then exactly to your point, do you care what cost of labor is today if in 5-10 years from now you've got 20 properties in your portfolio and maybe this was a start point, or maybe this was just a pain point that you had to get through to get to that point? And I agree. I mean, the beauty of what we get to do is we get to work with people all over the country every day, and we get to learn firsthand about what really is risk. Well, risk is subjective from person to person, but the one thing that everybody has in common is they're going to keep saying that. Don't be so simple-minded or short-minded and thinking that, well, man, everything costs a lot today. Think of the big picture. Think of that big picture.
Take the risk.
Yeah.
Yep. Life is short. And,
Exactly.
as I get older, I'm on the other side of 30 now. I turned 30 a couple months ago. I turn more and more into my dad every day. But it's like, if it was easy, everybody would do it, right?
Exactly.
Investing in real estate, there is so much room for success. There's so much room for potential, future earnings, generational wealth, whatever you want to call it.
Right.
But it's not easy. There's sacrifices to be made. When one thing is great and it looks perfect, it affects other parts of the market, and those become
Right.
more challenging. So it's that balancing act and realizing, hey, there's going to be some tough times. There's going to be some times where I might have to overpay for something, but over the course of my career, if this is something that I'm serious about,
Right.
it's only going to be beneficial down the road.
When you think about, our 9 to 5s, our earned income, I mean, quite frankly, there's things that we're going to do every day that we don't want to do, or that we have a quote
Mhm.
unquote problem with doing. But it's all about, to me, it's all the spirit of growing and getting better. Like, you got to go through it to get through it. And then when you come out on the other side, look how much better you are. It's no different when you're an investor. And I will say this to anybody who wants to hear this and doesn't know this or doesn't believe it. This is a very giving industry. What I found in my 10 years in this industry, and I'm 41 now, and I just saw my first few gray hairs the other day. So I'm having a little bit of a meltdown. So kudos to you for just being over 30. You'll get there. But the thing that stood out to me when I first got into this, and is still true to this day, is that the people who are where you want to be want to help you, because they remember like it was yesterday where you were, and they get excited about seeing people who are hustling and hungry for that success. They're going to help you. They will, without fail. So take advantage of Nate, take advantage of Think Realty, take advantage of RCN, take advantage of this industry. That's not a bad thing to say, take advantage of the industry, because everybody here genuinely is here to help. That we're all in business to make our lives better, make money. Yes. But at the end of the day, our companies exist because we want to help people. We want to help people get where they want to go, to help us get where we want to go, and just pass that on over and over. So winding down now, Nate, I can't wait to see you in Tampa in a couple of
Yep.
days. Hopefully the weather's better than it is today. It's been storming all day, but
Dang, okay.
I can't thank you enough for your time. I always enjoy seeing you, always enjoy hearing RCN give some of the best knowledge in the industry. And
Yep.
again, to anybody who's on this call now or will watch it in the future, I can't encourage you enough. Reach out to Nate directly, reach out to the team at RCN. They're going to take great care of you, and they're going to point you in the right direction. Whether you're a customer today or tomorrow, they're going to take you seriously and help you out with where you are in your journey. So Nate, appreciate you very much. I'll see you in a couple of days. Thank you all for attending today, and we'll see you on the next one. Again, if you're in Tampa, come to the event, come see Nate, come see me. TR Friend, go to thinkrealty.com. It's in the chat. Register for your ticket. TR Friend, free ticket to the event. Come see us. We want to help you. So with that, be healthy, be happy. Talk to you all soon. Thank you.